Hello and welcome to Business Junction with Ayomikun. I'll be talking about an interesting topic today, which I call the three money systems. These are the foundation or pillars on which every business should be built. Before I get into it, let's do a quick introduction, right? My name is Ayomikun Titiloye. I'm a child accountant and most importantly, your financial management advocate. And this is where I teach you to manage the finances of your business without all the technical jargons. So if you're new here, you're welcome to my channel. And if you've been here before, thank you for sticking around. You already know we keep it real and practical here. So grab your notepad, hit that subscribe button, and let's dive into today's conversation. Okay, so we're talking about the three money systems that your business needs. And you don't need to have an accounting degree before you put these three money systems in place in your business as a business owner or as a startup founder. So today I'll be talking about why most businesses fail, the three money systems. I'll be explaining it thoroughly, as well as the practical applications with tools that you can use to apply the three money systems in your business. And finally, we'll do a recap and, of course, key takeaways. Let's go. Okay, so the first on my agenda is the real reason why businesses fail. And these are basically mistakes that business owners make that block their growth and sustainability over time. Some of these mistakes are committed in innocence, right? But they happen, and you're familiar with some of them. The first on my list is poor cash flow management. Poor cash flow management is a situation where you're not managing the inflows and outflows of your business. I won't talk much into it because that's one of the three pillars that I'll be talking about later. But basically, poor cash flow management restricts your daily operations as a business owner, and this is one major reason why businesses fail. Another reason why businesses fail is mixing personal and business finances. I'm sure you've heard it over and over again that as a business owner, you should keep your business finances and your personal finances separate. You're not supposed to commingle them. You're supposed to have separate bank accounts so that when you're recording revenue or expenses, or when you're incurring those expenses in your business, they go through the business accounts. And when you're spending money for your own personal needs, they go to and from your personal accounts. When you mix the two of them together, it causes confusion and risk, not just for yourself, but for your employees. The third reason why businesses fail is wrong pricing strategy. I once did a course on this. Is almost a 2-hour course. Yes, you can find it in one of the videos. The past videos that I've done, the past videos that I have, right? And basically talks about how you should price your products, especially if you're a service business, or you're into production, or you are into production, or you are into handcrafted items, right? So it teaches you how to price your product properly. Now, taking it back to the real reasons why businesses fail, if you don't have the right pricing strategy for your business, it erodes your profit and weakens your financial stability in the long run. Another reason why businesses fail is overspending on non-essentials. Perhaps you're starting a business for the first time, for the first time, and the first thing that you're getting is a CEO chair. You've not even thought about how to stock your product or how to improve the quality of your product. You are not spending on the right things, right? Even as a growing business, or even existing businesses make that mistake. You overspend on things that don't matter. You leave your major focus, what you're supposed to be doing as a business, serving your customers and you start spending on things that are supposed to, beautify your image as a business owner, it will eventually drain your resources and slow your business progress. Why am I taking my time to go through some of the reasons why businesses fail? Is because at the end of the day, even if you put the systems in place, but you don't take care of these little foxes, like the Bible calls it, that spoil the vine, you are not going to do well, right? And the beautiful thing is some of these things that I'm mentioning here, some of them are addressed, under the money systems, right? The money system helps you to address some of these issues. Another reason why businesses fail quickly is poor profit planning, and this falls also under pricing strategy. Like I said earlier, some people having the sorry, like I said earlier, having not having the right price strategy in your business. You're not setting the right profit margins. You don't even know what your cost price is, what your selling price, you don't know how to fix your selling price properly. It's going to result in poor profit planning eventually, and this leads to, of course, you being booked and busy, but at the end of the day your bank accounts are empty. Another reason why businesses fail is failure to reinvest for growth. There's no point making money, making profits, and not reinvesting into the business. The moment you start eating your capital, before you know it, you don't have anything left, to sustain you. Now, if you don't reinvest in your business for growth, it will delay your expansion and keep your business stuck. The last one is, well, last but not the least, is poor record keeping. I also have a video on record keeping, the basic records, most important records that you should keep for your business. From personal employee records, different records you're supposed to keep in your business. Right? Go back to that video and watch it. Now, if you're not keeping the right records in your business, it will create blind spots and weaken your financial control eventually. So you want to make sure that this don't happen to you by setting up or putting in place the money systems in your business. Now, going to the 3 money systems. Can you see this picture here? You have a cash flow system, you have the profit system, and you have the control system. Now, if you look at the teeth of these gears, right, it makes it easy for it to move around, right? The moment any of these teeth displaces, right, that means this whole system will crash, it will fail. If it was an alarm clock that this system is powering, hypothetically, that clock will stop working. If your business is powered by this, and there is a failure in one of the, let's say the profit and the control is not, is not moving together, or your cash flow and control is not moving together, or any of this system fails, your whole system, is bound, to stop working, right? And that's one of the main reasons why I called it the pillars that your foundation, or the pillars or the foundation that your business should be built on. So let's go straight into it. And the first pillar is the cash flow system. What does cash flow mean? Basically, cash flow means the movement of money in and out of your business. I like to describe it as oxygen, right? That makes you remember easily. Money coming in and out of your business, just like you're breathing in and you're breathing out. Now, if you breathe in too much, you're going to suffocate, right? Without breathing out. Same way, if you keep exhaling, you keep breathing out, you're going to choke at the end of the day. You're not going to be fine. You're going to lose you're going to lose consciousness. So just like oxygen, without cash flow, even the most profitable businesses suffocate. You have to monitor what's going in and out of your business. Let's take, for instance, you have bills, you have bills like rent, data, communication expenses, and salaries. They will not wait for receivables. Receivables are basically money that people are owing you. You sold goods on cash, but you're yet to receive money for it, right? Bills and salaries will not wait for receivables. They won't wait for your debtors to pay you. So it is important to time everything. Cash flow timing is very, very important. And when you're timing your cash flow properly, your cash flow is more predictable because it is the lifeblood of your system. Your whole body system, that's of your business, they keep working properly, because oxygen is going in and out, blood is flowing properly. You get that flow, right? So as an entrepreneur, as a business owner, as a startup founder, it is important that you track your cash inflows and outflows very closely to maintain liquidity and your operations. No cash, no business, right? They say cash is king. So, how do you improve your cash flow system? How do you improve your cash flow system? Now, improving your cash flow system helps you to track, to visualize, and also forecast, issues to avoid liquidity surprises, to avoid you running out of cash to be able to meet your obligations as at when due. And one of the things that you can do to improve your cash flow system is to invest in your invoicing practices. You have to make sure that you have a good invoice system that takes account of monies that are coming into your business, right? And it's not just about prompt invoicing. You want to make sure that you set payment reminders, especially for your customers, so that especially when you're selling, also when you're selling on credits, right? To make sure that money is coming in as at when due. One of the things that you can also do under invoicing practices is to make sure that you have pre-numbered invoices, right? Make sure that your invoices are properly numbered. As if you're using the physical one, even if you're using digital invoices, make sure that they are easily numbered so that whenever any issues arise or anything goes missing, it is easy for you to quickly detect, such things like fraud and error within your system. So another way you can improve your cash flow system is tracking your expenses. Now, as a business owner, you need to monitor and categorize all your expenses diligently. You have to track your expenses as if they are the things that matter. I'm not telling you not to watch out for your sales. I already mentioned something about sales earlier. Now, your expense tracking helps you to make sure that you're not overspending. You're not spending on non-essentials like I described earlier, right? It helps you to make sure that you have cash whenever you need it, right? We talked about the invoicing, that's sales. We talked about expenses, money going out. Now, you want to make sure that you have an emergency fund for unexpected costs, which is where your reserves come in, right? You want to make sure that you have enough to save, to invest. This is the reason why you should have cash reserves. Now, when you do these three, you are sure to improve your cash flow system. Let's take an example. So you have 10 million in receivables, right, as a business, and you also have 200, but you have 200,000 in the bank. You ordered for goods, what, 10 million naira, and okay, I think I'm mixing up. Okay, you have 10 million in receivables. Somebody bought goods from you, right? Those are your debtors. They bought goods from you in sales, and over time they have accumulated, up to 10 million naira, right? But you have 200,000 naira in the bank currently as your cash at bank. You don't even have any petty cash in hand. Now, imagine if an unexpected situation comes up. Let's say your own creditors, come knocking. How do you pay them? You can't pay them with 200,000 naira in your bank. Let's just mean you have to pay your creditors out of that 10 million. 5 million, 5 million is for the people that you're owing, right? How do you pay those people? That means you have liquidity issues, right? Even despite the fact that you're making so much sales in your business. So it is important not just to track, but to make sure that you consistently, monitor, your cash flow system, That way you have a system that is running and will help you to stand strong and grow and scale. Let's go to the next one. The next one is the profit system. Who doesn't like to make money, right? Who doesn't like money? But a lot of people mistaking profit for what is left after sales. Profit is what is left after every expense that you have incurred in relation to that sales. After you remove all the expenses, that's when you can say you have made profit, right? And I'll describe it in this equation. You have sales minus your expenses equals profit. Now, there's also another mistake that business owners make, right? Let's say you made a sales of 5 million naira, right? And before you know it, there isn't that 5 million naira. Somebody saying, oh, I made a profit of 5 million naira. I want to do this, I want to do that. Even things are not in the budget. My dear, you did not make a profit of 5 million naira. After making that sales, you want to make sure that you remove every expense that's attributable to that sales. Is there a cost attached to the sales? Is there a rent? Is there a cost of goods, attached to the sale? That's direct cost. Is there rent? Is there salaries, that made that sales possible? Is there commission that you need to pay your, let's say, your marketing agent? If you don't remove all those expenses and you just spend, all the money that you made in sales, you're going to get into deep trouble, right? So sales volume alone does not guarantee profitability. The fact that you're making sales in your business, sales is booming, right? It does not guarantee your profitability. So you can have high sales with thin margins. And when I mean high sales with thin margins, you can have a sale of, let's say you make 5 million naira, but out of that 5 million naira, only 50,000 naira or 20,000 naira is your profit. That's very unreasonable. It's not even up to 10%, right? So you can have high sales with thin margins, but that can only leave your business busy and broke. In my local language, they will say, that means you're working for those you're working for the owners of the money, right? You're working for somebody else. You're just being busy. You don't want your own situation to be like that, right? So profit protects your business, is what protects your business from surprises, and it allows you to invest wisely, right? It allows you to invest in any investment of your choice, in treasury bills, in bonds, in fixed deposits, in name it, any investment that you can think of. You can splurge on investment because you're making profit. And when you invest, it helps you to start a cycle of bigger and smarter returns. That is what you should be using your profit for. So growth without profit is just spending disguised, right? You don't want that kind of situation to happen to you. So let's look at the profit system in practice. How do you increase your profit without compromising? How do you increase your profits without compromising? The first step is to develop pricing models that include built-in margins to ensure profitability. Now, when you talk about pricing models, going back to that video again on pricing, you will learn the different pricing model that there is, right? You look at the one that suits your business. Now you need to know what pricing model is suitable for your line of business. There's some businesses that their price models allows them to charge up to to have up to 40% profit margin, up to 20% profit margin. And there's some business models that you can if your profit margin is already exceeding 5-10%, people will not buy from you, right? Especially in retail, like supermarkets. So you want to make sure that you have pricing models, in your that suits your line of business, and that includes the right margins to ensure that you are profitable in the short run, and also in the long run, right? Another way to apply the profit system in practice is to apply budgeting frameworks. We have something called the 70-20-10 rule in budgeting. And what does it say? That you should spend only 70%. You can spend only 70% of your revenue, of your income on operating costs. And you should spend 20% of your revenue on reinvestment, while you reserve 10% for savings. Now, depending on your line of business or in the industry where your business is, again, the kind of budgeting framework that you use, you can influence that, right? You can have 60-20-20, or you have 50-30-20, but you should have a budgeting framework, right? If you have a budgeting framework, it helps you to make good use of the profits that you have, or the profit that is left after you have removed all your operating costs, right? Another thing that you can do to make sure that you're utilizing your profit well, or that you have a good profit system in place, is to regularly review your gross and net profit to understand your financial health. As a business owner, you should be able to know what your gross profit is and what your net profit is, right? Your gross profit is your sales minus the direct costs. Direct costs that are directly attributable to that sales. For example, you sell a bag for 200,000, but the cost of buying that bag alone is 120,000 naira. That's the cost price, right? So your sales your sales is 200,000 minus your cost price 120,000. It will leave you with 80,000 naira, right? That's your gross profit. Now your net profit is what is gotten after you have removed every other expenses, administrative expenses. For example, now the cost of transporting that bag, from one location to another. You paid, there's a portion that you allocate to salaries, there's a portion of that money, of that sales, that you allocate to rent. After removing all those costs, that's how you arrive at your net profit. So it is important that you review these things to be able to understand your financial health. Now, you can also use tools like simple profit and loss trackers and unit cost calculators to monitor your profitability. Have an accountant, have a consultant to help you come up with a profit and loss tracker or a profit and loss statement, however the case may be, on a monthly basis, so you know how well you are doing regularly, right? Let's take a quick example. You have a bakery with 5 million naira in sales, but 4.9 million naira in expenses. My dear, you're not profiting. You're only working for the owners of the work. I don't know. Do you understand? You're not making profit. You're just hustling, right? Because using the budgeting framework, right? If you have 70-20-10, if you have 5 million and 4.5 million minus, if you do 4.9 million in ratio of 5 million, is almost 100%, right? You don't even have enough for reinvestment and savings. So that means you need to take a look at your structure, right? So it is important that you consistently track your profits, because it will help you make informed decisions and helps you to have sustainable operations. So you're not just working, you're not just running a business for, let's say, 2 years, and after 2 years you've folded up. No, imagine a lot of people that are going to be out of business, are going to be out of jobs because you simply refused, to track your profit system. That should not happen to you. Let's go to the last one. And this is like my favorite, as an experienced auditor. This is a control system. And I likened it to a wheel, a steering wheel of a car. Like you see the way it's moving, left, right, left, right. If you're somebody that drives, you know that you can have fuel or engine, a good engine in your car. But if the steering is not working, bush, straight, you don't want that. So back to my talk. Cash flow is the fuel in your business, and without it, you cannot move. You cannot move. I explained what cash flow is earlier. And also, without the profit system, powering, you can also have a profit system, right? You can have an engine powering growth and progress. Let me take it again. You can have fuel in your car, right? You can have a good engine powering growth and progress, right? But if your steering wheel is bad, you're going to drive to the bush. There's no way you're going to drive to the bush. You're going to find yourself in a place where you did not expect, because the steering wheel is like a control system, or let me say the control system is the steering wheel, and it helps you to navigate safely. It helps you to turn your business around to the left, to the right. It helps you to make changes whenever necessary. It helps you to avoid obstacles. It helps you to stay on track. The profit the control system is they are the rules and approval processes. Basically, there are rules, there are structures that you have put in place. They're like indicators and brakes that help you to react before trouble hits your business. Setting approvals and rules in place in your business as a business owner, it sends messages to your employees like, oh, this person is too tough, this person is too strict, this madam is this madam is that. No, it helps you to safeguard your cash flow and your profits, right? So what are the practical measures and tools that you can take, to safeguard your finances? The first one is segregation of duties. You want to make sure that, especially if you have a big business, you have staff, you want to make sure that not one person is handling a process from beginning to the end. Not the person that is buying is the same person that is paying suppliers, is the same person that is packaging your goods, is the same person that is delivering to the customer. My dear, you're not going to have anything left in your business. So it is important that you segregate duties. You don't have to have so many people, right, in your business to make sure that you segregate duties. Even if you are a sole business owner, right, that you're just starting and you want to grow, at least you have consultants, that work with you. You have people that you can assign one task to or pay for, just to make sure that you are limiting fraud and error in your business. Of course, you're not the one that's going to commit the fraud, but it just reduces your error rate, right? There are tools that you can, that's the first tool that you can use to safeguard your finances. Another tool that you can use is spending approval limit, and I really like this, right? And when I talk about the first thing that comes to my head when it comes to approval limit is petty cash, right? There should be spending approval limits. You should have a fixed amount, for small expenses. See, there are small expenses that you think they don't matter in your business, like lunch, like entertainment, like buying water and things like that. But by the time you add them up, you realize, oh my God, I spent this much in my business, right? There's one of my videos on tracking how to monitor your expenses, and you see how little amount of money, little expenses can turn out to be something big. So it is important that you have a limit. Is it 50,000 that you want to set as a limit for your petty cash every month? Is it 100,000? Is it 200,000? Is it 500,000? Depending on your business, it is important that you have a limit. Don't just let anybody spend anyhow. Even you as a business owner, don't spend money, and let there be a limit, because it is what you do that your employees will do and follow suit. So also talking about approval limits, you should have situations where, let's say you have an accountant, you have a cashier, then you have you. Your cashier should not approve maybe nothing less, maybe only petty cash. Should only be in charge of petty cash, let's say 100,000 naira in a month, right, or 50,000 naira in a month. Anything above that, so like 1 million or 2 million, your accountant approves, right? And anything above that 2 million or 5 million or 10 million, depending on your line of business, they should bring it to your table to approve. These are ways that you can use to control expenses within your business and avoid overspending. Another one is the use of checklists for periodic cash count and regular bank reconciliations to maintain discipline. They'll bring bank statement for you, you don't even check it. You don't even know how much you are being charged as bank charges, right? Meanwhile, your account officer, your bank, they are cashing out. It is important that you do periodic cash count in your business. Know how much you have in cash that you have on hand in your business per time, and how much you have, in your bank account, to maintain discipline. Now, when you put some of these rules in place, it might look as if you're doing too much, right? And your employees, they might start to grumble, complain, but you know what you are trying to do. You are trying to safeguard your finance. You're trying to protect your investment. You're trying to protect your sweat, right? And one of the things that you can also do, to put control system in action in your business, is to have dashboard, with alerts. And if you cannot invest in a software, that will be prompting you alerts, whenever you overspend, have a simple spreadsheet, right, where you compare your spending versus your budget, for timely intervention in your business. Trust me, you're not doing too much. You're not doing too much. You're doing the right thing, right? Let's take a quick example, just like the other ones. You have a single missing receipt could hide a 500,000 naira leak, showing why controls matter. Now, you remember when I was talking about the cash flow system, and one of the ways you can, set up a proper cash flow system is to have an invoicing system. Now, you have an invoice that are pre-numbered, right? Pre-numbered invoices, pre-numbered receipts. The moment one of it goes missing, you know that something has happened because you have pre-numbered it, right? Now, if you didn't pre-number it, you just have invoices, you have just invoice slips, or you just generate it online, without numbering it. Anything can happen. The money can be diverted, right? So a single missing receipt could hide a leak, and it shows why controls matter in your business. Now, after talking about all this, do this, do that, do dashboard, do tracking, the segregation of duties, do approval limits, yes, it is important not just to set the systems in place. It is important that you conduct periodic reviews, to be able to strengthen these controls and update them whenever necessary. If you think, this thing is no longer working, or we've moved from manual, to online invoicing, then you need to update your controls. Controls is not something that you put in place in your business once and you don't go there again. No, you want to make sure that you monitor those controls and you update them whenever is necessary. So let's do a quick recap, right? And key takeaways. I talked about the three essential money systems for business success, right? And the first thing I talked about was the cash flow system. And I like it into oxygen, that is flowing like in your body system to be able to sustain your daily operations, right? Not just your body system, but your business. It help you to sustain your daily operations, which is money going in and out, right? I also talked about the profit system. The profit system helps you to prepare for growth through intentional pricing and budgeting. I talked about using the right profit margin, talked about pricing models. I talked about budgeting using the 70-20-10 budget rule, or any budgeting rule that you think applies or is workable for your business. I also talked about control system, having the right control system in place, which will stop leaks by enforcing strong financial controls. I also talked about updating those systems from time to time when you think they are not enough, or they're no longer serving your business as it should. It's important that you monitor the systems, you track them, and you review them as time goes on. Now, these systems empower you to manage money confidently, to avoid financial pitfalls, and to create a stable foundation for scaling your business. So, once again, we have come to the end of this session. right, on money systems. And if you found this video helpful, right, like the video, drop your thoughts in the comment sections. Which one of these systems spoke to you? Which one do you think you're doing and you need to improve on? Which one do you think you don't even have at all, and you want to set it up? Drop a comment in the section, and drop a comment in the comment section, right? And most importantly, share this video with someone who needs it. And if you have not subscribed yet, now is the time to do it, because trust me, there's so much coming. There are more lessons to learn, there are more stories, there are more real talk, about building and managing money wisely in your business. So on this note, I'll be saying bye bye. Thank you for watching. I'll see you in the next one. Thank you.